Let's look at some of the technicals because charts don't lie, right? I believe that these are some of the leading indicators that are telling us what Bitcoin is about to do in the latter part of this decade. It is about to freaking explode. It's already exploded. Guys, listen, Bitcoin has already become the fastest, the best performing asset in the history of the world. It's already become the fastest adopted technology in all of the human experience. It's already outperformed everything human beings have ever held dear in the entire history of the human race. Not in small slivers of time, but over time, it is number one by far. But I think we haven't seen anything yet. Anything yet. I think the best is about to come. And I think that that best is going to reveal itself inside of the next 4 years, which means you've got 4 years for generational wealth in front of you, 4 years to change your life forever, 4 years to never have to work for another man again, 4 years to be set for life. I believe that opportunity is upon us right now. Now, these indicators are telling us something. Let's look at the one on the left, the stablecoin market cap indicator. Every time there is a breakout in the stablecoin market cap, meaning every time this starts moving up, you get a Bitcoin explosion. Why? Because a lot of people convert their analog value to digital value first in the form of stablecoins now. So they'll take USD, convert it to stablecoin, and from stablecoin, convert it to BTC. They go native to native. Dollars to BTC is not native to native, but if you go USDC to BTC, you're now native to native. And so as dollars go more and more, and the Stablecoin Act, guys, that I just spoke about, it's called the Stablecoin Act that goes to the floor for review on the 27th of January, is largely focused on creating a bill that makes it easier for US dollars to go into stablecoins. It's called the freaking Stablecoin Act, for Christ's sakes. It's favoring stablecoins. It's telling you, the bill is basically saying, convert to stablecoins. Convert your value to stablecoins. And we're going to make it easy for you to do that. Now, why is that huge? Because every time money flows to stablecoins, Bitcoin's value skyrockets. You see this period right here? This was in, let's say, it looks like May, June of last year, 2025. Look at the move. We moved from 74,000 to 126,000. It looks to me, especially with the Stablecoin Act coming through in March, likely it'll get approved. Boom! This is going to freaking explode, especially when that Stablecoin Act gets approved. And that's going to feed into Bitcoin's meteoric rise. But this was the type of stablecoin inflow you got before the US had regulatory clarity on stablecoins. So imagine once the regulatory clarity is in place, everyone's going to be converting dollars to stablecoins, and that eventually feeds into Bitcoin. So we're going to see rises exponentially larger than the rises before because the inflow into stablecoins will be massively more. We can get ahead of this. I believe that stablecoin bill probably gets approved around March or so. All right, so right in that apex, guys. See March here? Right in that apex. Boom! The second indicator here, central bank balance sheets. Guys, we have been in a tightening period for several years. Most of you know that. And most of you know that we've only just started to come out of that tightening, that Federal Reserve central bank tightening, right? Now, a lot of people don't understand what that means. It means pulling liquidity, tightening the screws on the money supply and pulling liquidity out of the market. How does the central bank pull money out? What it does is it has several levers to use to do this. There is a cycle when it comes, there's a very predictable cycle when it comes to watching the six central banks' balance sheets. And when the balance sheets start to rise, it means that they're putting liquidity back in the market. So I want you to try to understand this relationship. It's important. When the Federal Reserve sells things on its balance sheet, it receives the money for it. That's pulling money out of the system. So when the balance sheet, when it has an item on the balance sheet and it sells it, it's really saying we want to draw money out of the economy and keep it ourselves. We want to lock it up. We're going to tighten things. So their balance sheet starts declining. When a Fed's balance sheet is declining, that's tightening. They're pulling money in from out of the economy to make that less money available. But I want you to look at this. So all throughout these last few years, look at the balance sheet declining. That's pulling money out of the system. They're selling balance sheet items to get the money locked in. Now look at what has happened. The trend has changed. This is about to explode, which means that they're going to start buying back items to put on the balance sheet, which is the form of putting money back into the system, increasing liquidity in the system. Guys, so stable coins rocking is a form of increased liquidity. Central bank balance sheet is another form of increased liquidity. Increased liquidity means higher prices. Now, one of the reasons I believe that there's been somewhat of a struggle with higher prices recently is because we have not broken out yet here and we've not broken out yet here, but it's coming. Liquidity is coming. Money supply increases are coming more and more. The third indicator, these are all leading indicators, guys. These lead price, they lead the Bitcoin price. Gold is another leading indicator. A lot of people don't realize that. Gold leads Bitcoin's price. It is the first runner. It runs before Bitcoin every goddamn time. Do you understand this? You can go back through history of every major Bitcoin super cycle. Gold ran first. It's always the first out of the blocks. And when gold gets tired, it passes the baton to Bitcoin. And Bitcoin takes it and triples what gold did or more. It's the faster runner. Gold is 5,000 years old. Bitcoin's 17 years old. Who's going to run faster? A lot of Bitcoiners have been sort of kind of bummed out that gold has been performing so well and Bitcoin's kind of been stagnant. And I tell them, what are you talking about? Root your brother on. Root that senior citizen on. Because if you're impressed with the 90-year-old dude racing, he's about to pass the baton to a 17-year-old. And that 17-year-old is, and you thought you were impressed with the 90-year-old running the first leg? Wait till the 17-year-old gets the baton. It is going to put the 90-year-old that you were impressed with to shame. It does it every single cycle, every single time. And the bigger the gold run first, the bigger the Bitcoin run to follow. You have to know financial history to understand these things. And I've done that work for you. Be glad gold is front running, and be glad it's front running by a nice margin, because that only tells you what the next super run in Bitcoin is going to be. It always triples or more what the gold run was. Now, if you don't believe me, you go back in history every time. Well, I'll do it for you. I think I did it for you here in one of the upcoming slides. All right. This is very powerful. I'm trying to get you ahead of what's about to happen, guys. I know we're a little off for 2025, but it's just delayed, not off entirely, just delayed. All right. I know I was calling for higher prices by 2025, but it's just delayed. That beach ball under the water was just held a little bit longer. It's still going to happen. And everything happening under the hood is indicating that very powerfully. Delays are not failures. In fact, delays add power. You know how a bull fight happens? They agitate the bull in the cage before they release him. Agitate him, make him angry, so that when that bull comes out into the ring with force, power, and violence, it's driven by anger. Right? Now, you might think this is cruel, but that's besides the point. I'm just using an example here, right? So they agitate, and agitate, and they agitate. Now, when they really want the bull to be faster, to be more powerful, to be more violent, to be more explosive, they delay the release of the bull and agitate him longer. Think about this concept. We did not get the bull run that we expected in 2025, but it's just held back. It's just agitated longer. It's just freaking delayed. It's not failed, it's delayed. And I believe that delay is close to being over. And if what we thought was going to happen in 2025 was impressive, I think it's bigger. I think it's better going forward, just because delays produce more. Here's another indicator that I watch, guys, the Bitcoin fair value model. I'm not going to go into the specifics of how this is calculated. You can do that. It's a metric that comes up with where Bitcoin's fair value is, all right, based on a variety of different metrics. And the fair value is the green line here. A lot of times, Bitcoin is trading around its fair value when it's going sideways, oftentimes. But when it is rising or declining, when it starts a period of momentum, it often vacillates between getting ahead of fair value and getting below fair value, getting ahead of fair value, getting below fair value. So here is us below fair value, getting ahead of fair value, going back to below fair value, getting ahead of fair value, then going below fair value and getting ahead of fair value. Now we are below fair value. What's the next move? Ahead of fair value. Now, fair value continues to rise for the most part over time. So one of the best times to get interested in Bitcoin, especially from an accumulation point of view, is when you are under fair value. Someone says almost like the 20 MA. That's correct. But most people lighten up when you're down here because they get scared. I don't want you to be that kind of novice market player. Don't get scared down here. Get aggressive down there. You should never be scared with Bitcoin, but if there's a point to be scared, get scared up here. Don't get scared down here. That's novice. Don't be a novice. This signal, guys, it's a proprietary signal based on some mining net metrics. And I'm not going to go into the great detail, but I will say this. It has been deadly accurate. In fact, it's never freaking missed in history. Never. Now, there's always maybe a first time to things, some things anyway, but all we have is history to go by. And history says when this metric reaches that level, which is above 90, we're off to the races. We're close to being off to the races. We're close to being off to the races. This is last cycle. Close to being off to the races. Now, this is a log chart, so it looks like those price movements are flat, but they are not, guys. This green dot here, just so you know, this looks flat on the chart, right? This part looks flat on the chart. Let me show you how not flat that is. This is 15,000 at the green circle, and this is 126,000. So think about this. I'm gonna write this clearer. From the last time this was green above 90, Bitcoin was at 15,000 and change. 15,000 and change. That's the bottom of the market in November of 2022. Go check it yourself. Now, since then, we have run to 126, 15,000 to 126. We're back above 90. This tells you right here, we are not in a bear market. We just got paused a little bit. And this is back above 90. Where are we? Around 90,000, and this is around 90,000. So this indicator, if we go by history, we're about to rock it, bro. It's never missed. This is a chart of the US business cycle, which is largely the global business cycle, right? What you see at the bottom is the business cycle. Let me just highlight that for you so that you don't have to go searching for it. This is the Bitcoin cycle, and this at the top is Bitcoin. Every time the business cycle cools off, here are the cooling off periods. Bitcoin's price cools off. Every time the business cycle cools off, Bitcoin's price cools off. A lot of people might say, well, Oliver, you know, the business cycle has been kind of hot, hasn't it? Hasn't it been? Well, not if you look at U.S. manufacturing. U.S. manufacturing has been close to a depression. By the U.S. manufacturing metric, which in my opinion is the most important metric, one of the most important metrics for monitoring the U.S. business cycle, it has been in a bear market. It's just starting the bottom. So when you look at the U.S. business cycle from that perspective, we're down here. Let me show you. From the business cycle's perspective, we're down here based on U.S. manufacturing metrics. Look at where we are right now. Uh-oh. Every time, green to red. Every time, green to red. You see that? See that green to red? So wait, let me show you. We're green and green. Green to red. We're green and green. Green to red. These are huge moves, guys. Green, green, green to red. They may not look like it, but they're huge. Just to show you, this move was from 3,000 to 69,000. This move, I told you, this move was from $600 to 20,000. And this move was from 15,000 to 126. We're back at frickin' green again. Crazy. Now, I want to show you something really interesting. Look at this carefully. Sometimes between red and green, you get a yellow. See? Sometimes between red and green, you get a yellow, which also produces a rise. The biggest moves the most accelerated moves come from green most of the time. But sometimes you get a yellow in between. So this time we got a yellow from red to yellow. Now it's green. You see, at 15,000, it didn't go green, it went yellow. And every time green follows yellow, look at what happens in the past. Green follows yellow. Look at the acceleration. Green follows yellow. Look at the acceleration. Green follows yellow. Look at the acceleration. Green follows yellow. We're in store for the acceleration. picking up what I'm laying down here, people? It's freaking powerful. We can get ahead of this. All right? I'm not coming to you after the fact. I'm coming to you before the fact, like I usually do. Bitcoin has historically lags global M2 money supply. So I want you to see how the money supply all over the world has been exploding, exploding US, exploding Japan, exploding China. China's the worst. Exploding Europe. Money supply is starting to accelerate again. Now, China has never paused. I don't want to go there right now, which tells you their economy is just a paper tiger. They're a paper tiger. It's all smoke and mirrors based on paper money. If you look at, in Japan as well, paper tiger. But if you look at the US and the euro, I want you to see how the money supply dipped in 2021 into 2023 or so. Dipped. We've started to rise again after the dip. This is a new era. This is a new era. Now, I want to show you why that's important. So I'm gonna do the dips in red for you. Dip in red, dip in red. We're gonna forget these. They're paper tigers. All right. So dip and dip. And we have started to rise again, right? After the dip. Started to rise after the dip. But look at before the dip. Look at this whole freaking rise. Look at this whole rise before the dip. Relentless, relentless, relentless. We're just starting a new one. So duplicate that on the other side. Do you understand? Duplicate that on the other side. We're going parabolic with liquidity, parabolic with M2 money supply, which raises all assets, but raises Bitcoin the most. But Bitcoin always lags. It's the fastest horse in the race, but the last one out of the blocks. This has happened every time. And with the new rising, it's only a matter of time. So it's pulling gold, it's pulling, silver, it's pulling platinum, it's pulling copper, it's pulling other things as well. Bitcoin comes out of the blocks last always, but it then passes everyone by orders of magnitude because it is always the fastest horse in the race. There's another indicator of what's to come. M2 pulls Bitcoin meteorically after it has risen for a while. Here's another really interesting indicator. It's the number of days spent at a loss. When this metric peaks, you are at a top. You see, these are gains, right? But loss is down here. Loss is at the bottom, basically. So loss is down. So less loss is up. As Bitcoin's price goes up, there are more and more coins not in a loss. As Bitcoin price drops, this is indicator of Bitcoin days at a loss drops. Now, when you get down here, you are ready for a bottom and a sharp move up. Every time you get down here, see? Down here, do this a different color so you can see it. You get down here, here, you are ready. You get down here, you are ready. You get down here and down here, you are ready. You get down here, you are ready. Look at where we are. You freaking kidding me? Freaking kidding me? Kidding me? I mean, it's all over the place what is about to happen. Every which way I look, I just see the same freaking thing. I'm like, how can I not share this? How can I not share this with my bros and my sisters? How can I not share this with you? It's crazy. What kind of person would I be? I didn't share this. We need to get ready for this. This is a very basic indicator that I always want you to keep in mind. And I never want you to forget this, guys. I used to say it's the lows, stupid, but I'll be a little nicer. It's the lows that count, guys. Stop focusing on Bitcoin's highs. That's what novices do. And that's what the legacy media does. Stop getting sucked in with the highs. It'll always keep you fearful. So, why do I mean the highs will keep you fearful? Because when Bitcoin starts dropping from 69, and now you're at 40, and now you're at 30, and now you're at 20, and now you're at 15, like this makes you scared because you are focused on 69 and it's going down. That makes you scared. When we peaked out at 126, people are scared now because we've dropped to 90. 80, 90. They're scared because they're focused on the highs. When you peak at 20K and you drop to 3K, you get scared because you are focused on the highs. You got it backwards. You focus on the lows, $160. Where's the next one? 3,000. Are you kidding me? Do you see this? Wait a minute. $160, 3,000? Does that make you scared? Look at the difference in the lows. Does that make you scared? No, that should make you encouraged. That we went from low to low, 160 to 3,000. That's at the worst point of Bitcoin, and that's impressive. This is the proper way. So 160 to 3,000. And what's the next low? 3,000 to 15K. That's not scary. That's a 5X. Yeah, we're 89. So let's call this 80K. 15,000 to 80K and you're freaking scared? Where's the next one? 300? Where's the next low? Focus on the lows. Get the highs. The highs are where novices focus. The lows are where pros focus. Be a pro, bro. This is the greatest indicator of all that I want you to keep in mind. If you did the opposite of what this dude has done for the last 30 years, you'd already will have won life's game. All you got to do is go the other way. This guy breaks the laws of mathematics for being wrong. You know how they say you can flip a coin? If you flip a coin long enough, they say if you flip a coin long enough, you're eventually going to get 50% tails and 50% heads and 50% tails. Now, in the short term, you might get more heads than tails and more tails than heads. But if you flip it long enough, it evens out, right? That's mathematical law, right? Probability. Well, not if you're Jim Cramer. You see, he doesn't have 50% wins and 50%, despite 30 years. It's almost always wrong. So this is one of our greatest indicators. All right, don't forget that. Jim Cramer says, I don't believe Bitcoin can reach 500,000, let alone 1 million. That's improbable. Looks like we're hitting 1 million soon, guys. Buckle up. We got one of the greatest indicators on our side here. The Cramer effect, that's right. Someone says, I can't believe he still has a show. I just think it's on purpose, guys. Remember, guys, you are going to be consistently led astray. I need you to understand this. You're going to consistently be led astray. There's going to be news articles that keep you away. FUD like quantum computing risk. Ridiculous. A bear market top, this and that. No one wants you to have freedom. No one wants you escaping. No one wants you to be financially free. You need to be a pawn. You need to be running on that hamster wheel. Keep shit moving. on the hamster wheel. Don't we can't lose hamsters. We need them running on the wheels, man. We can't lose a lot of them. Who's going to run the wheels? You know, the Jim Cramers of the world are positioned to do that. I'm telling you, I've always used this analogy. In real estate, if you want to keep an area very exclusive, wealthy, do you bring the price down, Holmes? Hell no. You want to keep the riffraff out. You want to keep the regular people from coming in. You want to keep it posh. You jack the prices up, right? That's what they're going to do to Bitcoin. They want to take it away from you. Crashing it will not take it away from you. That'll bring it to you. Bitcoin is going to crash, people. You know, Bitcoin is going to crash. It is just going to crash upward. They don't want to bring it to you. They want the Jim Cramers to scare you away. They want the quantum FUD risk to scare you away. They want to take it from you. Tell me you understand this. They don't want to bring it to you. They want to take it away from you. The only way to do that is to crash the price upward. They're going to want to outprice you. That's why your time is limited.